Economist here. So I have the day off today, so I might actually do a couple of videos if I feel up to it. I got some chores to do around the house, like mowing the lawn. I haven't had a chance to mow the lawn in quite a few days, so it's starting to get kind of long. But today's video, I'm going to talk about underwater mortgages. This is something that everybody freaks out about and thinks about when it comes to buying a house, is that what happens if the house value goes under what I owe on it? And this is like a big deal for a lot of people. And it was a major concern of mine. I know when I went to go buy a house, what was it, about almost 2.5 years ago, that was one of the major concerns I had. Interest rates were about ready to rise, and I thought for sure housing was going to crash. At least the prices of homes were going to crash, and that I would end up being underwater on my mortgage. That is not what happened. I mean, in fact, it was completely the opposite of what happened, and the house price took off, and now it's much more higher than I could have ever imagined or even wished for, even after a significant drop in price, considering what the ZELLE estimate had to say over the last few years on it. Now, real important information, what it comes down to, is that the mainstream media right now is pushing hard. I mean, I Googled this, this term, seriously underwater mortgages. And I was amazed on how many articles I was able to find talking about it. And it made this very fear-mongering kind of aspect to it that had people believing that there was this gigantic rise in how many underwater mortgages there are in existence right now. And if I remember right, the article said something about a rise of 2.6 to 2.7, and this represents like one out of every 35, 37 houses or something of that nature. And it does seem kind of significant. But when I just kind of did a little bit of research and thinking, well, how many underwater mortgages existed in 2019, right? Before the pandemic, before all this stuff, right? So I go back and I found an article, and I left it down in the description, both, two articles for you. One recent one and this one from 2019, and it says back in 2019, 9.1% of all mortgages were underwater, seriously underwater. 9.1%. Like, you could raise, the amount of underwater mortgages in existence right now could increase by 3 times, and it still would not be at the level it was back in 2019. So I think about the underwater mortgages that are going to bring the housing market down, and everybody freaking out about this idea of it. And there's all these mainstream media articles talking about seriously underwater mortgages and how they're on the rise. And it doesn't even come remotely close to what they were prior to the pandemic. This is how the mainstream media really guides the markets. It didn't take me but just a quick Google research, right? 2019 underwater mortgages, instantly found that article, right? No problems to it. But if anybody just reads the mainstream media propagandized articles of today, you're going to have this feeling, this belief that these mortgages are all going underwater and that there's this huge rise of them. Right? And yes, they are rising, and there is, some places that have a significant rise in them taking place. And I would imagine that those places will be buying opportunities for a lot of people out there. But to take on the general idea that there is this huge, seriously underwater mortgages that are running rampant through the housing market, through the mortgage market, is simply not the case. There was far more back in 2018 and 2019 than there is today. Right? Not saying that it won't get worse, very well could, but it isn't the case. And the mortgages could go 3 times higher with the underwater mortgages that are out there and still not be at the 2019 level. Right? Something to think about. Oh, hey, by the way, Lumberjack Landlord, got your shirt on. I thought it was fitting for the video today. Lots of laughs. The guys above bought into the propaganda. It is. And I mean, this is really what it comes down to, is you can see it right there. I mean, if you don't see the propaganda, I mean, I'm just looking at it as neutrally, really. I mean, it's just I don't really care which way the housing market goes, right? I'm buying a house. If it goes up, cool, I'm awesome. I got a house that went up in value. If it goes down, cool, I might jump into some investments. Either way, it doesn't matter to me. Like at this point, I really don't care, right? And so it's just an observation that I had taken on. I was just like, wow, seriously, underwater mortgages. When I came across this article, I'm like, wow, this is like, kind of scary information. Huh. Let's question that, right? And then I found this other information that said, no, it was far worse, just a few years ago prior to the pandemic. Okay. Well, so we have stuff to worry about. I'm not saying don't worry about it. I'm just saying that it's not nearly as bad as it was and when nobody was talking about it. I mean, I imagine some people were, but it wasn't big news like it is today. All right. Good morning, by the way, everybody. Let's see here. Who's all up in here? All right, Friday Live. Yes, we are here. Thank you, Lumberjack. I remember you were worried about that. I was very worried about it, right? And that's what, and that's the thing. When you have a particular belief or understanding or idea on why it is that something is going to take place, but then it doesn't happen, you have to go back and you have to question why it is that it didn't go down the way you thought, right? I mean, that's is what it comes down to. Like, I mean, I have been so wrong on the housing market for so long that I finally just said, okay, what is it that you're thinking or looking at that you're missing as far as, calling this thing out wrong? Because I thought for sure when I bought my house, I was just torn up. I was just like, man, how am I going to handle being underwater on a mortgage again, knowing that I had a foreclosure in my past and all that problems that came from it and all the other stuff? I mean, it tore me up. I had super bad anxiety over it. Right? But it didn't work out that way. It actually worked out far better than I could ever have possibly imagined. Right? So, I mean, here I was fearing the worst and got absolutely the opposite from it and just ended up in a house that has, tens of thousands of dollars more of equity in it than when I bought it. Right? And considering I had to put a huge down payment on it, I'm so far away from being underwater on this house. It's like, it doesn't even like, I mean, underwater is just like a distance. It's so far away, and so it was all opposite of what it was that I was thinking was going to happen. I have to understand why that took place, like why it was not going down the way I thought. And now that I'm starting to figure it out a little differently and understanding why it was that I was missing it back then, a lot of it had to do with just my own mental blocks and fear and anxiety from having the foreclosure in the past. All right. But, all right, good morning. Okay, what do you think about the effect of corporate tax cuts being shut off in 2025 on the economy? What do I think about corporate tax cuts being shut off? I don't know. I mean, do you think that's going to end up like cutting into the unemployment or into the employment part of things and start cutting corporate profits, which means that they're going to start cutting back on everything? I don't know. I mean, we'll have to wait and see. Like, a lot of times, when you think about like how it is that tax cuts, there's like a curve to it, right? How much you can actually tax somebody to the benefit the government to the point that it actually hurts the business, right? And so you can end up pushing it too far one way or the other. And by cutting the taxes on a lot of these corporations, you can advance the amount of activity that is happening within them, right? But then a lot of corporate greed begins to take place and people are taking those profits for themselves, which in turn then starts forcing the taxes upon them again, or at least removing the tax cuts, which I always think is kind of funny, like the tax cuts coming to an end where really the taxing was the part that really the government is doing. So like ending a tax cut doesn't make sense. It's incorporating the taxing, right? Anyhow, we'll have to wait and see like how much economic activity is happening at the time. I mean, most of that stuff has to do with budget deficits and, government intakes and stuff like that. And I don't think it has much to do as much to do with monetary policy as people would want to say it does. I don't necessarily agree with that. Yeah. I am a real estate agent here in Michigan. I am getting ready to get licensed in foreclosures. I see the writing on the wall. All right, you lose your car before you lose your house. If you have car payments. Looks like someone is learning it's the same bankruptcy and everything else related. We are nowhere even remotely close to crisis levels. How's the house? The house is cool. Love your work. Blessing from Ireland. Did you know that Cantillon was an Irish origin? Yeah, he was an Irish origin. That's right. All right. Down here, people would rather lose their house than brand new car. They are 30K upside down on. Bankruptcies can 3 times from here and still would not be crisis level. Hey, thank you, Matthew, for the $20, man. Very cool of you. My man, great shirt. 50% of people on their own their homes free and clear. 70% of the remaining people have debt under 4%. Under 4%, the issue will be jobs, jobs, jobs. Yeah, I totally agree. I think like that's probably the biggest thing for everything is the jobs market. Like when it comes to what the Federal Reserve is going to do with monetary policy, how the housing market is going to go, whether or not we see that rise in foreclosures, all that other stuff, I believe it comes down to the jobs market. And if you start seeing a significant rise in unemployment, then I think things will begin to change at that point. You'll see interest rates change. You'll start you start seeing the housing market start to significantly change. And that's really what it's going to take is going to be the jobs. Now, I said it before, and I'll keep saying it. So long as there is a lot of service industry jobs that are available, there is not going to be the significant rise in unemployment like people are anticipating when you see these corporations starting to shut down and laying people off. Now, these corporations, these zombie corporations who should never have existed in the first place, who are far bigger and expanded beyond their capabilities, are going to lay people off. But those people are going to move over to the service industry. Now, it's not a great job, but it's a job. And with a job, you can at least make some sort of a payment. And a lot of times you can take on roommates or cut back on things that you had, previously enjoyed in life so that you can make those house payments. And with a job, you can do that. Now, if you don't have a job, you're not going to be able to do that. And so if you have a significant rise in unemployment, then you would probably start seeing the things change in the economy like a lot of people are fearing. But it's not happening yet. Right. And that's one of the major things that is now got everybody so confused about the interest rates from the Federal Reserve, right? Because everybody was talking about 6 interest rate cuts this year and stuff. And I was just like, where are these delusional people coming from? Like, why in the world would they even think that? And it was just like, oh, you guys were all looking at that dot plot map, right? Bummer, right? That was a bad move. However, the idea behind it was legit at the time, thinking that inflation was going to come down to the 2% target if that's what you were believing. So, unfortunate for a lot of people out there who think that there is a Federal Reserve 2% target inflation that they are going for, has it wrong, and that it's actually a 2% average inflation rate over time, which means that appropriate monetary policy would mean that that inflation would be moderately above 2% for some time. And there's no mathematical formula for figuring any of that stuff out. So now most people don't take that into consideration. And by not taking that into consideration, they really don't know how it is that the Federal Reserve is going to be moving. And by just the simple idea that they are going to be lowering interest rates into the future, and people taking on that perception or idea or just anticipation or strategy, they will then conduct themselves as if it happened. Right? And this is really like, I don't know how many times I've explained this. It is so difficult for a lot of people to wrap their heads around. And what I just said was probably so confusing to somebody who heard it for the first time, but that is really how it's going down. It really is. And that's what's kind of scary about the whole thing. All right, let me move on. Thank you so much, Matthew, for the $20. I see I got another one up there. Let's go look at it here. All right, City Star Productions, man. Thank you so much for the $4.99. Can anybody give some examples of major products that used to be in the U.S. but was overtaken by foreign production? I think TVs, right? Like TVs used to be all those electronic stuff used to be American-made stuff. In fact, everything was American-made. Everything that was awesome was American-made, like all the way up until like probably the 60s, right? Like, I mean, everything. Like it didn't like everything, all the household appliances, all your furniture, all your cars, all that stuff. Like everything was American made. And it was all awesome stuff. It was all high quality. Like I remember a buddy of mine, he had a refrigerator. His grandparents had a refrigerator out in the garage, and it was so old. It was an old General Electric refrigerator, and this thing was like ancient, like from like the 50s or something. I don't even know how old this thing was. And it was the cold, like it kept everything at like literally 33 degrees. It was the coldest thing in the entire world. And he goes, you know what's crazy is that is the original light bulb in this thing since, like my buddy was saying, since he was a kid. This is like when we were in our 20s, you know? And so like he didn't even know, like he never remembered seeing the light bulb being any different than the one that was in there. And that's what was crazy about all the things that were built back in the day, is that American made stuff was made absolutely of the highest quality that we could possibly do. Like it was a strive for excellence on everything. And it wasn't it I don't know exactly why it was that people had that sort of ambition within them to do that, but I believe that it came from the idea that an individual could build it themselves. Like they knew how. Like a lot of Americans were farmers, and by being a farmer, you had to be pretty crafty at just about everything you did, because you didn't really have access to, you know, the stuff that you needed. So you had to either invent it or create it or, you know, repair it or do whatever. And so generally, like just being a farmer gave you a lot of skills as far as mechanics and crafting and designing and building and just doing things. And by putting a group of those people together in a single area like the United States, it just flourished with ideas, right? And so when you have all these guys who are really good at what they do, and they're building the best that they could possibly build, and they're competing against other people who are building the best that they could do, then you're only going to end up with the best products out there. And that's what the United States was experiencing. See, after we invented all this stuff, other people were like, oh man, you build tractors, we can build tractors too, but we can build them a lot cheaper and crappier and all this other stuff, and they're going to be like 3 times cheaper. And the Americans are like, okay, so now we got to compete with these foreign productions over here. And that's when like cheap cars and stuff like that started to come up. All right. Ches V, thank you for the $1.99. Zombies need to love too. Oh, zombies need love too? Yeah. All right. Imagine going from 80 to 100K to 30 or 50 with most Americans having zero savings. Something is going to break. Yeah. Can you imagine that semi-successful? Man, that would suck. That would absolutely suck to go from 80 to 100K a year. You know what? Most people would not be able to handle something like that. And that's because they have moved themselves into luxuries. You see, that's right there. What you have just said is a prime example of how the Cantillon effect can go right down into an individual person and how it is that you conduct yourself. See, with $80,000 to $100,000 a year, people say, "Oh man, you can barely live." No, that's not true. See, there's people out there who live off of $35,000, $50,000 a year. They don't have a great life. That's okay, right? They're making it. It's not great, right? If you want to make it great, if you want to make it good, you got to earn $100,000 a year, right? But if you're earning $100,000 a year and you think that that's just barely acceptable, then yeah, you're not going to be able to accept a $35,000, $50,000 a year. See, this is where like driving a '99 Ford Explorer instead of that Camaro. See, I could go buy the Camaro. I could go get it today. I could go sign the deal on it right now, be driving around in a brand new car, right? But then my move into luxuries would end up forcing me into a position in the future that if I had that cut in income, it would be devastating to my life. It would force me into misery and could possibly end up in poverty because of it, okay? Because of the debts that I take out. See, it's important to understand that, man. I mean, it's just like if you can earn $100,000 a year and live like you're earning 35, you know how short of a time period you would actually have to work? Yeah, I mean, you may not be like living it up during those few years, but you would be living it up after that. Like it would not take very long at all of working $100,000 a year, but living like you're earning $35,000 a year would not take you very long, and you would be very successful in living independently. Yeah. All right, moving on. Thank you guys for all these super chats. It's very awesome of you. All right, did I get them all? I guess so. Yeah. All right. house appliances in general, automobiles, everything was better quality too. They need to look at inflation with what affects people the most. Food, energy, that's what affects people the most. Yeah, but that's the thing. What is it? Radzer? Oh, Ernie's going nuts over there on his. Uh, that's the that's the thing. There is no, like, when they look at inflation, right? There is a million things that you can look at as far as an inflation goes, right? You can look at food and energy, you can look at the house, you can look at the car, you can look at our wages, you can look at all these different things, right? Here's the problem. Inflation is the results, the prices anyway, right? Is the result of the expansion of money and credit. And now I know a lot of times people say, well, wait a minute, dude, you say that, the money printer wasn't the reason that the inflation took off. That's right. See, the inflation came from the added consumption. This is really important to understand, that, like, where inflation really ends up coming from. It's not from the increase in money. It's from the increase of money and that increase in consumption from the increase in money. Like, if you didn't have the increase in money, then you would not have the ability to consume more. If you had the ability to consume more, then it would create a supply-demand imbalance. So now when you have more increase in money and it sits in a bank but doesn't actually make it into the system, it's not going to create inflation. However, if you have money that has been injected into the system from all channels all at once at the same time, and all of a sudden you have a ramp up in consumption, at the same time you have a severing of the supply chain, you're going to have supply-demand imbalances, and this is really where the inflation came from. So it's not that they need to look at a particular thing for inflation, right? They know where the inflation is. They can look at food and say, this is how much food is inflating. They can look at energy and say, this is how much it's inflating. They can look at all these different aspects and say, this is how it's inflating, but that's not what they are going for. What they are going for is to try and find that consumption to ramp up in order to create the supply-demand imbalances that they were looking for an inflationary scenario that was going to be more in line with their monetary policy. It's not like, I mean, they can adjust the numbers and make them whatever they want. Like, the numbers that they give us are ultimately fake anyway. I mean, I've done videos on this one in the past where, I don't know, about 5 years ago or whatever it was, Fast Beast 56. I don't know if you guys ever heard of that, but it's where the government came out and said that all the numbers that we are telling you about the economy are essentially lies. Right. And now they're good enough for you to do investments and, your portfolios and fundings and all the other stuff, that you need to do. But they're not real numbers, because the real numbers need to be hidden for national security reasons. So when it comes to, like, the numbers, it doesn't really matter. I think it's probably more important to find the direction that they are going and by how much, not the exact number that they are, and especially not comparatively to what they used to be, because you can't compare inflation now to the way it used to be. It doesn't even really matter at that point. It's just like they're not the same thing. So again, it's just like, it's more like looking at what it is that the Federal Reserve was needing, right? Not like, how do they fix it? How do they make it? Whatever it was, their monetary policy was coming to an end because of the low neutral interest rate and the Fed funds rate being near the lower bound of zero, right? This whole coming to zero and having, like, no more room to move was a major problem for the Federal Reserve. And understanding what it was that they were using for their strategy to get themselves out of that was completely psychological. Okay? Well, it wasn't completely psychological, but it was a major psychological event that they are now still using to push their monetary policy and their agenda. I guess that the whole pandemic was to establish the major credible threat, right? That the inflation scenario is going to continue. So you think about it, people are wondering why the economy is not going into the recessionary scenario that everybody was anticipating, right? Like, everybody is missing this. In fact, I was just watching Daniel DiMartino Booth, right? She's great, awesome, love her. Now, she was talking about how, comparing, like, the great financial crisis to things are today. But here's a major difference, is that during the great financial crisis and everything leading up to it and just shortly after it, except for the quantitative easing period in which that everybody thought that there was going to be a hyperinflation scenario, for the most part, the inflation expectation was incredibly low. And this is important to understand because it's the inflation expectation that was really like hurting the Federal Reserve and their monetary policy. Now, if I've gone over that speech a million times, but John Williams' Monetary Policy for a Low Neutral Interest Rate World. Monetary policy was swimming upstream against an inflation expectation that was persistently too low. This was a major problem for him, right? And so now when we think about if an inflation expectation is low, and you have interest rates that are elevated, that raises the real interest rates, all right? By having a higher inflation expectation, you will lower the real interest rates. And now this is such a backwards, like kind of counterintuitive idea that it makes it very difficult to people to understand why it is that the economy is doing so much better than anybody would have ever anticipated, considering that the Fed funds rate are so high. Well, the inflation expectation continues to rise. And if the inflation expectation continues to rise, what it's doing is it's lowering the real interest rates. It's getting ever increasingly closer of the neutral interest rate to the Fed funds rate, making the restriction upon the economy less. Understanding this is very difficult, but once you do, you get it. It's just like, okay, if the inflation expectation rises and it lowers the real interest rates, the restriction upon the economy becomes less and people become more active within it. And that is so hard to understand considering that everything the Federal Reserve is doing is so painful to the people out there. Right? They're like, man, what you're doing is creating this painful experience for me. But really what they are doing is they're lowering the real interest rates. Very difficult to understand. Yeah. And you think about it like, oops, there was another, I was looking for this one, the super chat. You think about it like Donald Trump did the exact opposite of this back during his administration, when he said there was no inflation, the Fed should be printing money. He was lowering the inflation expectation. At the same time, the Federal Reserve was trying to raise interest rates. That was raising the real interest rates at the time. And that's exactly what they were trying to do, right? They were trying to make the economy more restricted at the time when they were raising the Fed funds rate. And Donald Trump was actually helping out with that by saying the Fed is making the wrong move. They should be going into negative rates. They should be printing up money. They should be doing all this other stuff, right? And everybody was like, yeah, pissed off, like, let's fire Jerome Powell. And their inflation expectation pretty much hit the floor. There was nothing, like nobody had any belief that there was inflation expectation when Donald Trump was saying that there's no inflation, right? It was just essentially gone. So understanding that psychological trick upon the economy and what it was really doing is really important to understanding how the monetary policy is working. Right? It's like, if you can see that, it becomes clear. It's like, it's obvious, and there's like, oh yeah, but most people, they hear that and they're like, what in the world, All right, $4.99 from City Star Productions. Referring to the Cantillon effect, what do you think would cause new money to churn off in the country's economy and in our country's economy? The new money would turn off when the debt stops being purchased. Like when the U.S. Treasuries are no longer the safe haven, like when they're no longer considered the safest, liquid, deepest market, awesome safe haven asset, when they're no longer considered that, then the new money will turn off. Now, the reason why it's not just a matter of the Federal Reserve, because if the Federal Reserve was to buy all the U.S. debt and print up all the money, it doesn't matter, right? Because we are not going to be able to buy stuff from ourselves if we don't have it to buy, right? We would have to produce it ourselves, which isn't going to happen because we don't produce enough TVs for everybody. So the TVs that are made here in the United States are probably going to be quite expensive, considering that the Federal Reserve is printing up money and just injecting it into the system through the purchasing of those U.S. Treasuries, which is essentially monetizing the debt. It won't work that way. Right? It just simply won't work. So if you have foreign nations who are buying the debt, right, now you got new money coming into the system. That new money that comes into the system can then go buy that foreign production that's going on out there. And that's the cycle in which it has to work. If it doesn't work that way, then the new money turns off and everything begins to collapse. Right? The U.S. Treasury has to remain that safe and liquid asset. That's the most important part about it. The moment that it loses that credibility, to being if it loses the credibility of being liquid, meaning that if I want to sell this bond, I can sell it right now. I can sell it for what I think I'm going to, the price, like what I would feel that the price is appropriate, and I wouldn't have to wait for it. It would happen right now. The moment that that changes for the U.S. Treasury, which it kind of is teetering on in a sense, right? You know, in a lot of ways, especially when you got the Treasury stepping up and buying its own bonds back to make sure that that liquidity stays within the market. There's a lot of questions on whether or not that's going to be continuing, like the new money coming in from the purchases of U.S. debt, you know, by foreign entities out there. Now, granted, is that the only way that the new money can come into the system? No, there can be new money coming into the system in a lot of other ways. We could literally like start building stuff and sending it out there to the world. Like we could start doing a lot more agricultural products like we are, and then to stop purchasing of a lot of things that are out there and start getting our trade balances a lot more in line. Right now, that would start bringing in new money if we could actually get to the point that we would flip the trade balance. If that was to take place, we would actually be shooting ourselves in the foot because we sell our new money to the people, or we sell our debt to the people out there of the world in order to get the new money in. So that's not the direction we would typically want to go, right? It would be lowering our standard of living and increasing our workload by going that direction. So it's not the way we're going to go. Right? We're going to try and issue out debt as much as we can, try and be the world police, and, you know, hope for the best as long as you can stretch it out for. Eventually it will end. It will end. I mean, it will come to an end at some point. Like, but how far out, and, you know, whether or not they can come up with the tools to go into negative interest rates and digital currencies and forcing people into the system and keeping them from actually leaving the system. There's a lot of things that they can do to carry it on, and nobody knows exactly how that's going to look. All right, man, I'm really babbling off this morning. What time is it? All right, 31 into it. But sir, the federal government says this is the best economy ever. I don't know. Whatever. I don't know about the best economy ever. I mean, it's just an economy. It's like the weather, you know. Today's nice weather, tomorrow might be rainy. No big deal. It's just what it is. The government tells me everything is great and my groceries are actually a blessing to cost an arm and a leg. Okay, I've never heard that one. I don't know where that one would come from. All right, so you're saying we have to engage in austerity measures, kind of. We have to engage in austerity measures. No, we don't have to, but do you want to fix the system? I mean, is that a fix? I just like, it is what it is, man. I mean, you know, I'm willing and prepared to deal with the way that it is right now. I don't think we need to do anything different. You know, I mean, I'm doing things different. I'm doing things different for myself. I mean, I'm not expecting anybody out there to change anything about the way that they are doing, not the government, not the corporations, not the people, not the way they vote, not the political parties, nothing. I don't expect anybody to do anything out there. Nothing. Right? My expectations of people out there are pretty much non-existent. Right? I mean, I just don't. And so everything that I have, that I got going on, is because of me. The bad, the good, the bad, the ugly, all of it is all because of the decisions that I have made. I'm not going to put that on anybody else but me. Right? And that's really what it comes down to. I do not care. Right? Give me whatever opportunities that are out there and I'll look for them. And I don't need government to change the way that they are doing things. Like, they already screw it up enough. Like, to have them to do anything in my life is asking for trouble. Period. Like, I just can't find anything that government can do that's a benefit other than to get the hell out of my way. You know, that's it. And so, you know, to look at it even from a political mindset is like, you know, it's actually damaging to understanding what it is that you need to do. Because there's nothing that they can do to help you. Nothing. Alright, moving on. What's happening all night? Calling over. Yeah, my dice was squishing the seat. It's kind of a little deformed there. Alright. I like my own lawn to afford my groceries. I like to mow my own lawn. Yeah, I mow my own lawn. I got a huge lawn too. You know? And that's what's funny about, like, groceries. Everybody talks about how expensive they are, and I need to get Sarah to take you guys grocery shopping someday, man. Like, show her how she should, like do a video of it because comes home. I mean, it's expensive. Don't get me wrong. I look at it, I'm like, good Lord, man. But then she shows me some of the deals that she finds, and I'm like, that doesn't seem that bad. Like, it doesn't seem that bad at all. And, we eat fairly well. But again, like, she's really good at shopping. She shops many places and knows where and how to look for good deals. She used to work grocery too. So. A deja vu. Looking 8 years into the future, it is difficult to tell what prices all around will be. I know we will still be here and working, however. Yeah. And see, this is like, even, like, I mean, I know like working retail, I see it. And it's difficult to just come out and say, hey, man, look I found another product that went down in price. Oh, look, and people are going to look at that one product and just say, okay, well, yeah, but the rest of my life is all expensive. Okay. But I mean, I see it. Like, the other day, a guy came in, returned a faucet, right? Just a kitchen faucet. Now, he had purchased it like, I don't know, maybe a month and a half ago or something like that. And finally got around to installing it, and it was something wasn't right with it. It was damaged or whatever. So I went to return it and realized that the new price that had come in was actually $15, $20 cheaper. Something, it was like, I think originally $129, and I think the credit on it was $114.99, right? And I'm like, oh, wait a minute here. That's not the price. You paid $129. I'm looking at it, and sure enough, the price on it, the retail price, had actually come down. Now, again, like, nobody's going to care. Nobody's going to care that a kitchen faucet went from $130 to $115 when they're looking at the rest of their life being so expensive. But to me, that's a sign. To me, that's like an indication, yes, the prices do come down, and they are coming down in a lot of ways and from a lot of products, but people aren't going to notice it because how often do you out there and buy a kitchen faucet, right? Unless you're a lumberjack landlord. And even on still, he's probably already got his mind set on the ones that he, already knows. And all right. Hey, Simon and everyone. Hey, Brody, what's up? Seems like a waste of money, but I need to see the Mises. Mises, huh? Plywood is the ultimate poor man's boat building material. Fred Meyer in Warrenton is crazy expensive compared to the ones here in Spokane. Well, I think that has a lot to do with the particular area that the Fred Meyer is in. Like, Clatsop County is turning into an expensive area, and it's really the affluent things that are taking place, like the rise in the medical district. Like, that to me is probably the biggest indication of what's happening here in my area. Is we are turning into a retirement community. Generally, the older you get, the closer you want to get to medical facilities, right? Because you're going to have more ailments, more issues, and all that stuff. So the retirement community here in my area is growing just as fast, it seems like, as the medical communities or the medical districts. And like, Astoria has like a lot going on. In fact, there was a lot right across the street from where I work, which already is in the medical district. Like, the hospitals across the street, there's, pharmacies, dental, all kinds of stuff all around. But there was a freight company that used to exist right across from where I work. And they tore that freight company down. It was an empty lot, and one of the other medical facilities, one of the private medical practices, is going to build an office there and expand even more, right? So it's completely surrounding our area. That comes with a lot of money. The people who work at those facilities earn a decent amount of money. Now, all those people they need a place to live, and there's only so many places to live in Astoria. And believe me, I suffer the consequences of not even having a big enough network to find a place to live, even though I grew up here and know a zillion people and have a YouTube channel with a zillion people upon it. I still could not find a place to live in Astoria, which was crazy to think during the pandemic, right? That's why one of the reasons why I had to buy a house, and one of the reasons why I had such high anxiety over it. But think about what it is that it's doing to my area, right? All the houses are really expensive. What I bought for a house is not that fancy of a house. It's a very typical house. In most places in the country, it wouldn't be that expensive, but here it was a lot, right? Here it was a lot because there's not that many homes available, and it's a 4-bedroom house, which makes it even more money. So when I think about how it is that the work environment here went from working class fishermen, loggers, working class people doing that sort of thing to now the new money is coming in from retirement people who don't provide any kind of goods or services or any kind of thing. They just take from our area, right? I mean, not saying that they're taking like they're horrible people, but they don't contribute, right? They're retired. And then you got the medical district that is growing. And so here's two major incomes, right? Two major money people. Well, what else can I say? Not necessarily the working class blue collar people out there, even though like nurses and doctors and people like that might be considered somewhat of that, but there are much higher working class of people than say like, the guys who are working the lumberyard like I am, right? I mean, it's just like it's a different set of incomes. And that's what's really going on here in our area. So it makes it very difficult to work and live here, right? And it's even scarier for my children to think like, what are they going to do? Right? They're going to have to leave the area to find opportunity, right? Unless they become a doctor or take care of like, take care of old people or something. All right. Thank you so much, Isaac, for joining the membership. Hey, tomorrow we are going to do, not tomorrow, what is today? Friday. Friday I have off. Sunday we are going to do a members only live stream. I'm going to cover the Federal Reserve speech that Cook just recently gave. It's not that exciting, but I think it's pretty good information that's within it, at least kind of giving us, a bit of an up-to-date on what it is that the FOMC is thinking. A lot of times people will look at Jerome Powell and want to fire him or give him blame or do all kinds of stuff. And that, when I hear people doing that, I really kind of lose a little bit for what it is that they are saying, even though what they say may be valid. But just blaming Jerome Powell in general makes it very off-putting to me, because there's 11 other members to the FOMC who are voting on monetary policy, and he is just one of those people. He's a voice for the FOMC. He's a spokesperson, right? He's just the messenger, right? And there's nothing we can do to change anything about way things are going by getting rid of Jerome Powell. That will not change a thing, right? So even the idea of like picking on him or pointing the finger at him or anything else, really it loses a lot of credibility with me, because it's just like there's other aspects to this FOMC that need to be considered in order for a real change to take place. And if you don't include that and only focus in on Powell as being a problem, then how is it that we're supposed to understand what it is that the monetary policy is supposed to be, right? Because he's just one person. That's where like even understanding like, something like, Lisa Cook with her speech, it's going to be, it's probably not going to be like that, like profound or anything that goes into it, but it does give us an idea of what it is that they are thinking. And this is how you get the information, Rest in peace, Jim Simmons. Jim Simons? Who's that? I don't know who that is. I'm all thumbs today. Do you see any opportunities to profit in the transition to central bank digital currencies? No. Like, I mean, I would imagine that there's probably opportunities out there somewhere, but like, I don't, like, are you thinking like a carry trade from one into the other or something of that nature? I don't think anybody's going to even really notice when we switch over to a central bank digital currency. I think it's going to be such a mellow transition of banking transactions that are done in the central bank digital currency and not necessarily done by a conscious like decision to use it, but more of just like debit card and credit card transactions being done in it. Interbank transfers being done in central bank digital currency, stuff that we won't even notice or pay attention to. So like, the idea of a central bank digital currency and how to profit from it, it may come from like maybe the idea that like gold and silver might become more popular to use to try and get out of the idea of using a central bank digital currency. But since most people probably won't even know that they're doing it, I don't think it's really going to matter. I don't know if anybody's going to even notice, Thank you, Brad, for the $2. Lumber is low. What about the other building materials? Well, I would have to say that it's not, building materials haven't come down in price. Like somewhat on doors, like exterior doors came down a little bit, but it's not like, it's not even so much that I would even say that it happened, right? I mean, you know, if you take a door that's selling for $650 and now it sells for $620, are you really going to think, oh, wow, look at the price difference, you know? No, but when the price of a door went from $350 to $650, you really notice the difference in it. So is the prices come down? No, not really. Not in the building materials, even though they stopped moving up. I think probably the more significant thing is that the availability of it is coming online. And that's really important when it comes to building a house because time is money, right? And so if you can have access to that material in a timely fashion, then that is a savings and a price difference, you know, especially if you had a really extensive lead time to it. So in that sense, it's becoming more available, and so there it is a little bit cheaper, yeah, but not really necessarily on the bottom line price of it. Is it any cheaper? Not really. Lumber, on the other hand, is down. It's down a lot, right? And here's something that's really kind of interesting. Canfor just announced a permanent or indefinite curtailment of production from one of their facilities up in the British Columbia area. And I thought it was pretty interesting because some of the argument that was being stated inside of the article, let me see if I got this right because I don't have it in front of me. But they were saying that there was environmental issues that was creating a shortage of timber coming to them, right? So like, you know, they talked about the beetle infestation and wildfires and stuff like that. But then they also talked about regulations, right? Regulations being an issue. And now I kind of thought about that for just a second because that's the same issues that they were facing here in Oregon. So now think about this. Two major producers of lumber, the British Columbia area and Oregon, right? The state that I'm from. Oregon is like, I believe still the #1 lumber producer in the United States as far as like the different states that are out there producing lumber. Oregon is the top producer. British Columbia is, I believe, the most concentrated lumber producer in as far as the United States consumption goes. So like, let me see if I can explain this right. 20% of all softwoods that are consumed here in the United States comes from Canada, and 50% of that comes from the British Columbia area. So you can imagine how much lumber is concentrated just from the British Columbia area coming into the United States. It's an incredible amount. In fact, I remember working at, like 2017, 18, seeing like my entire lumber yard, you know, walking through the yard and seeing all Inifer lumber from British Columbia. Like every single unit in the entire yard had come from that particular area, from that mill, right? From those mills. During the pandemic, when there was like trying to find lumber anywhere we could because there was a shortage of it, like I saw 20 different mills, like all the different units of lumber that we had all came from a different lumber mill. It was just insane. I'd never seen anything quite like it. But that's what they had to do in order to find the lumber to, you know, to fill the needs that we had. It's just it wasn't available out there, so they were finding it from any lumber yard they could. So now we think about this for just a second, because if you read deeper into that article, and like I said, I didn't leave a description or in the description or anything for it. But in the article, if I remember right, they were saying that it had something to do with there being plenty of fiber out there, but the amount of allowable cut, but what was actually being cut was 42% of what was the allowable cut, right? So now, let me see if I got this right. So the mill was saying that the area has plenty of timber, right? And that the allowable cut that was designated for their area only came in with 42% of it. So now I think about it, it was just like, oh, what's going on here? You have all this allowable cut, but yet there's something taking place that doesn't allow for the harvest to actually happen. Like the loggers aren't going up there cutting the trees and bringing them to the mill. Why? Right? They're only 42% of capacity. Okay? So is there a shortage of loggers? Is there a shortage of trucks? Is there a shortage of conditions? Or is the regulations making it so unprofitable for them that they just don't even go and try? Right? And that's what I believe is taking place, not only up there, but also here in Oregon. So yes, politics have a lot to play into that, right? But now these are just two areas of an entire vast, huge market. And now I think about what's going on within the market itself right now, and that if you go and you look at like CNBC and you look at the like agricultural chart or whatever, and you go to lumber, I believe right now they're showing the July contract, and it's for like 530 or something. I forget what the exact number is for it. But the May contract is closing here next week, and that's closer to the cash or print price, right, of what lumber is actually selling for. Oh, great! Now I got a bee up in here. Sorry, guys. I am horribly allergic to bees, and when I get stung, I'm afraid that I might have to go to the hospital and get hit with the EpiPen and stuff. So this guy who's buzzing around my phone isn't making it any easier. Hold on, maybe I could. Shoot. Let me see if I can open up the door and just let him out. Oh, now, buddy. There he goes. Right on, perfect. Awesome. All right, so anyway, back to lumber. So the cash price is a lot closer to the May contract, and if you can find the May contract, I think if you go to like bar charts, you should be able to find the May contract there, and it's trading at around 500 per thousand. So 500 per thousand on lumber prices right now is incredibly low, considering like this is the same price that we would have experienced back in like 2017, 18. This is like what prices would have been. So lumber is incredibly low. There's not a lot of demand for it. And if there's not a lot of demand for it, considering all the higher inflation costs that are taking place, it's no surprise why you're finding mill curtailments taking place out there, especially if you have any kind of regulation pressure that's being put upon it. Then those mills are like, screw it, we're out, right? You know, we're out of here. And it's not a surprise, right? If you go and you look at like building starts right now, or at least building permit issuance is really low. They're like, the home builders are not excited about starting homes right now, considering they don't know exactly where it is that home prices are going to be going into the future. If you have any kind of like lack of confidence in the price that you're going to be able to sell that home for, then you're probably not going to start it, right? I mean, you got to have a lot of confidence saying, okay, if I'm going to build this home, I'm going to sell it for $440,000. By the time I complete it, I cannot sell it for $400,000, right? There goes all my profit. My profit margin is done. So this is where like home builders are stuck right now, where, yeah, the home prices are elevated in a lot of places, right? They're not necessarily to the underwater to the sense that they were back in 2019. So we know that they're, you know, the conditions there are somewhat favorable to the home builders, considering the lack of inventory and all that other stuff. But the uncertainty behind it all is really got them very concerned, and nobody really wants to start because of that. All right. Moving on. All right, here we go. Bees that way. All right. Fake bee. It's not a fake bee. It was a real bee, man. It was a real big bee. No, like last time I got stung. When did I got stung? I got stung around the ankles, and it was so bad that my lips started to swell up and stuff, and I'm like, oh crap. And yeah, in fact, I think I got an EpiPen in here. Oh no. Let me see, do I? No, I guess I don't. I don't know where it's at. Oh, I think it's actually in the Toyota. Alright. I really think CBDC are going to make credit card companies way more profitable, so it might be a good time to start some positions. Oh, as far as the credit card companies, yeah, that might not be a bad idea. My right hand doubled in size, and my arm had 2 big bumps. Oh, from getting stung? Yeah. Ohio has cheap houses. So does Missouri. I hear Missouri has some really cheap houses, but no real money to make. All right. What is All Nighter saying here? AAE and Semi Successful have an interesting convo going. Oh, I hadn't thought of credit and CBDC coexisting. My one finger stayed swelled up until Wednesday. I hear another buzzing outside. Yeah, the damn neighbor's over there doing his work like I should be doing. All right, hey UE, what would you ask Powell if you had a chance? I mean, if I really had the opportunity to ask the FOMC something, like if I really got to like set them down, I would like to ask them how it is that they are, what chart or where it is that we can as individuals go and find that 2% average inflation rate over time. Like, how far back in time do we have to look to find where it is from current inflation scenario that we are experiencing? How far back we have to look to find a 2% average? It would be nice to have a daily chart to know where in history the 2% average inflation rate can be found. Like, is it, 2008? Is it 2009? Is there a particular date? So if there was one thing that I could ask of the FOMs, because everything else they just talk about, they expose everything that they're doing. You just have to read their speeches and really understand what it is that they're trying to communicate through them. That they basically talk about it all, but that is something that they don't. Like, they don't have a mathematical formula for figuring out what 2% average inflation rate over time is, and they're not tying themselves to any mathematical formula, right? So there has to be a way that they are looking at the past to find where it is that the 2% average can be found, right? And that must be something that they are communicating within their strategy to themselves, but they are not communicating, not even through their speeches, right? I mean, I did find that one coming from what was it, Boston or whatever, where they talk about, if that it was somewhere around October of 2008, and this was an article or a paper that came out like maybe 6 months, a year ago. So that would be like what I would want to ask Jerome Powell is, like, how do you figure that one out? Like, how are you guys coming up with that idea or mathematical formula or chart or something to figure out where in the past the 2% average inflation rate can be found? Like, how far back do you have to look to find that? And how do you using that for your approach to consider monetary policy? Like, are you waiting to meet the inflection point where you can't get any closer in time and still achieve a 2% inflation, average inflation? Like, is that the moment that they're looking for? Like, these are the questions that I have for Jerome Powell, would be that. Like, does any of that make sense to you guys? Other than that, they talk about everything that they're doing. We're building in Missouri 1,800 square foot house for $220,000. Oh, are you now? Not too long ago, the Rio Grande Valley region of South Texas had new builds below 100K. Just a decade ago, we're talking 3-bedroom, 2-bath. Now, not a single home is listed below 6 figures. Yeah. I mean, I think about, like, even the area that I'm in right now, it's just like the cheapest house that you could possibly buy is so expensive, and it's probably just hammered, needs to be fixed up. I mean, it's just like, it's ridiculous how expensive homes are here. I mean, it's kind of cool in that. Like, I think I'm in an area that is going to continue to do this, right? There's not a lot of room to expand, right? We're like, ocean to one side, river on another, it's just like there's not a lot of room. So the houses here are probably going to continue to go up in value and up in price, so long as the conditions in which that are existing, which don't seem to have any kind of reversal to them, are going to continue in our area. Like, it just happens to be a unique spot for that. So, I mean, it's fortunate in that sense, but bad for my kids, as far as trying to make it here. Where can you buy a UE hat? There's a link down in the description. There should be anyway. To Teesprings. It's unfortunately it's not this exact one. This one was actually sent to me from a fan, but there is Uneducated Economist merchandise, and you can find the link down in the description. Welcome, Greg. Yeah, welcome, Greg. Thank you very much for being here, man. Thank you, All Nighter, for welcoming Greg too. What is the most likely bankruptcy for which there is high risk of a domino effect? Okay, so here's the thing. Like, you're probably talking Contagion, right? The Contagion effect that ends up taking place within a debt collapse. Now, you have to understand, like, how is it that everybody's leveraged off of each other? And understanding how this contagion effect would really take place. And now I like to use the example because I thought one was really going to happen in China when their major builders over there, like Evergrande, started to collapse. I thought that there was going to be a major contagion that took place from there. Like, I was anticipating it almost. Like, I was reporting on it. I'm thinking, okay, keep an eye on this, and then it didn't really manifest out to the idea that I thought it was going to happen, or at least the worst case scenario from it didn't unfold in the way that I thought it would have. And I wasn't trying to be predictive of it, just more very concerned about, like, that it was prime opportunity for something like this to happen. So let's understand, like, what would a contagion effect look like within the debt markets, right? Because you got to understand, the entire economy is almost exclusively looked upon inside of the debt markets. But that's not really the economy. The economy is you and me and the decisions that we make. Like, I am the economy. I am my own economy. You are your own economy. Right? But the decisions that we make collectively end up getting looked at as if it's a singular thing, like it's a generally speaking thing. However, it's not. It's the way that we interact with it and the way that most people interact with it. And so when you interact with the financial markets, well, now you got something different. You're using credit cards to make purchases, you're using mortgages to buy homes, stuff like that. Now there's purchasing power that takes place within the economy that typically would not be there if you did not have access to this debt market, right? So the debt market is the economy that most people are now interacting with. That makes it seem like it's probably the most focused in aspect of the entire economy, right? But again, it's just the decisions that you and I are making individually from it. So how does this domino effect work? Right, this contagion effect. Let's imagine for just a minute that you are a contractor that is working with this major builder like Evergrande, right? And this is in China. And I think this is a good example of it because even though it didn't play out, I think it could have. And you're getting paid from Evergrande, but you're not necessarily getting paid outright in cash. You're getting paid in something called commercial paper. Now, commercial paper is very close to cash, but it's not exactly cash because it's more like a contract to become cash here in about a year. Let's just assume a timeline on it, right? So now this commercial paper that says that you're going to get paid in a year from now carries a little bit of interest to it. See, like, you're getting paid, you can cash it in right now, collect your money, or you can sit on this commercial paper for a little bit and get paid a little bit of an interest on it. Now, this is a way that Evergrande can postpone their payment to you, right? By taking out this, or by paying off in this commercial paper. It's a little bit of a benefit to you because you get to collect a little bit of an interest off of it. And so by putting this commercial paper on your balance sheet, what you are doing is you are putting something of an asset on one side with the liability out there, meaning that you need to get paid, right? From Evergrande. So now the balance, the asset, right? If that is good, right, and you are confident that Evergrande is going to pay, well, this is going to be a benefit to you, right? Now, your credit rating is looking good because you have this asset on your balance sheet, and your debt that you have now issued out there, because very similar to what Evergrande has done, you have debts out there, right? So your credit rating is also based off of your assets that you have, which is based off of the idea that Evergrande is going to be paying that commercial paper. Does that make sense so far? Right? It's important to understand this, and I kind of oversimplified this a little bit, even though it's really complicated. This is what ends up happening. Evergrande can't pay, right? They're screwed. Like, they're all of a sudden, their contracts are not getting paid to them. They aren't able to get in new money coming in from new contracts that are issuing, and now that commercial paper is starting to lose value because the chances of it actually coming due and getting paid are very low, considering that Evergrande is now facing problems. So now here you have this particular asset on your balance sheet, right? That was promised to pay. You thought it was going to pay. It was going to have a little bit of an interest to it, but now the price of it that you could sell out there on the market is dropping significantly because the chances of Evergrande being able to pay that commercial paper by the time it comes due are dropping significantly. So now this is the problem that you're facing as somebody who holds Evergrande's commercial paper on the balance sheet, is that the asset prices is starting to fall. Your balance or your credit rating from your balance sheet and the assets that are falling off of it is now dropping as well, meaning that your credit, that the loans that you need to borrow money or collect an interest or taking out an interest or whatever, is starting to become more difficult. So now your business operations are becoming harder to deal with as well. So now this is part of the contagion effect that becomes from it. The people that you had commercial paper with, right? Because now again, just like Evergrande, you're borrowing money, right? So the people that you have commercial paper with, their asset, their balance sheet is now starting to fall as well. And this is the contagion that starts to be created from it. This is a bit of an oversimplifying of the operation on how it's going down, but if you can kind of understand on how that's working, this is how it's a domino effect going into the rest of the world, because whoever is holding anybody's debt that is now losing value now has to suffer the consequences of that as your credit rating starts to fall and the problems that start to exist from that. And again, starts to find its way out there. This is where governments start to come in, and it's just like, oh shoot, you got that commercial paper that's bad. Like, that's when government might step in and back that stuff up, right? And try and say, okay, well, your credit rating's now good again because now you're backed by the government on this commercial paper or something of that nature. If something was like that to happen, then hopefully in their minds they could actually stem the tide of the domino effect, right? They could actually block it from happening. And that's kind of the idea behind it all. Now, whether or not they can control it or make it happen or just temporarily postpone it, it's all a matter of time to figure that out. All right. Old houses have lead and asbestos in it. No biggie, though. Well, as long as you don't tear into it and create a dust bomb, you're all right. Just sits there and doesn't do anything. Your question is important. What does Semi ask here? Said that the reason they bailed out the banks back in 2008 is because payments, credit cards, etc. was about to fail. Well, the financial system was freezing up. All right. What are you guys talking about? All right. Hats are out of stock. Wow, that's weird. All right. Semi-successful. What your uncle tried to do is something similar to what they have now called the DTCC. The man. You guys are talking there. I'm missing it. Okay. Gold is pumping again. All right. Made it on the stream. Right on. Good to see you here. Lead fumes from smelting are harmful, not so much lead paint or anything or any other solids. Yeah. I think about like being a kid and like fishing. And when you're fishing the creeks, like, you can't have a lot of gear with you, right? You just basically have your fishing pole and maybe a couple of hooks and some sinkers and stuff like that with you. And because like when you're fishing the creeks, you're constantly snagging and breaking the line, so you're always rigging up new hooks. But trying to carry that stuff around with you is kind of difficult, especially when you're standing in the middle of the creek or something, you're trying to fish a particular hole. And so, like, it was not uncommon to carry lead sinkers in your lip, like to drop a couple of lead split shots, you know, inside of your lip, carry it like chew or something like that, and then just be able to pull one out and rig, you know, another line up and cast out there. And I remember doing that as a kid all the time, carrying lead weights around in my lip. Oh God. Alright. Always wear a mask when tearing out plaster or linoleum floors for old houses, asbestos prone. Old plaster. Shout out to George Gammon. If I had more time, I would totally come see you all at the Rebel Capitalist Live. Yeah. In fact, I just finally, like, I was a little concerned that Sarah wasn't going to be able to come, but my mom's going to come up and hang out with the boys while Sarah and I go to the Rebel Capitalist. So, yeah, and George Gammon's awesome. All right, thanks, Semi. It's annual, so maybe next year. Yeah, I mean, the Rebel Capitalist is probably, I mean, I would have to give it to Mike Zuber's One Rental at a Time conference was absolutely an amazing fun time. However, the Rebel Capitalist is a very prestigious event. Like, there is a lot of excellent speakers there. You know, some people like aren't even speakers, you know, who still show up for it, are, you know, some pretty high level people. And so it's just like an amazing event, and everybody is just so awesome within the networking groups of it, you know, like communications and conversations and stuff like that go around. It's just incredible. And a lot of people show up for it, you know. I mean, anywhere from, you know, I would imagine anywhere from 600 to 1,000 people, you know, depending on, you know, what it's like this year. But the Houston event was pretty fun. I really enjoyed that. It was the first one I had gone to. I just saw that email yesterday, Simon. Right on. All right, good deal too. Rebel Capitalist is way too expensive, and the location is also secretive. Well, Charger Mopar. There's a reason why he does that, and it's because I don't think he wants like a rush of people bombarding, like overwhelming the conference. Not to just give it away, but the security of it is pretty low. Like, they do have security there checking to make sure that, you know, people have paid to get in and stuff like that. But I mean, ultimately, if it was overwhelmingly overrun by a bunch of people, there's no way that the event would be able to go off as well as it does. So the event is somewhat secretive for that purpose, I would believe. But anyway, it's still, you know, it's still an awesome event. It's still, in my opinion, it's well worth the money. I mean, you know, it's just like, I don't know where else you're going to find the ability to have the level of speakers that attend this event, and then to be able to actually go and speak with those guys, like to actually go up and shake their hand and meet them, and, you know, possibly ask them a question or something like that. I don't know where else that you're going to be able to find like that kind of concentration of people in one area. So, you know, to me, it's well worth the money, especially if you're new to the stuff and trying to really get a good understanding of what's going on out there in the economy. These level of speakers, you know, are just, they're top level. All right, did I get another one? Yes, I did. Angry Capitalist. Thank you for the $5. Thoughts on end of mortgage balloon payment for those who stopped paying during the big cough relief? Seems like it could be a big problem. I don't know. Like, the ending of the forbearance period came during a time in which that the interest rates were still significantly low, right? They were still, oh, hey, Ernie, what's happening? I'm in the middle of a live stream. What you up to, man?
Go ahead.
Well, I'm talking to 400 people.
Oh.
So, did you want to talk about something, or?
Mow your lawn.
What, you are too, or?
Yeah, I'll clean it up and get all the heavy grass out of there for you.
Dude, appreciate it, man. I'll pay for gas or buy you lunch or something, man. Yeah, absolutely. You're taking my chore away from me, though.
What?
You're taking my chore away from me.
Oh, that's too bad, isn't it?
Yeah, it really is, man. I appreciate it. Ernie's pretty cool, yeah. You come over to offer to mow the lawn for me. I just have to pay the gas. All right. What do you think about assumable loans? I don't know. I'll answer that question here in a second. Yeah, thanks, Ernie. I'll come over in just a little bit and talk with you. Um, what do I think about assumable loans? I think assumable loans is probably going to end up being once people start understanding that they could probably do it. Like, I don't even know that, I mean, I don't know to what extent that the loans that are out there have the availability to be assumed by another party. So, like, okay, an assumable loan is like if I have this loan to this house, to be able to basically hand that loan off to another person, right? And they can just assume the loan that I already have. And instead of starting to reestablish a new loan, right? They just assume the one that I have. And a lot of times people, I don't even think realize that that's even a concept or a possibility that it even exists out there. And from what I understand, banks hate the idea of it. Like, they don't want to have somebody else assume a loan, right? They want to establish a brand new one and just pay off that old one. But from what I am gathering, that the concept is there on a significant amount of loans out there, that it would actually be like a strategy that people could use. And so if you think about that, like for me, I have a 3.125% interest on this house, right? That's pretty low considering that, houses now have like a 7% interest to it. So the ability to have somebody assume my loan gives me the opportunity to say, hey, I can actually have a profitable position here, as the person who is assuming the loan would then have a lesser payment that they would be making on my home as opposed to another home of the same price, right? So if they were to try and, like, say for example, the house is $600,000. It's not, but let's just say it's $600,000, right? And the payment that they'd be making on it if they were to assume my loan would be far less if they were to buy a new home or another home at $600,000 at a 7% interest. So at that case, I could then add a price tag higher to my loan or to my house, saying, okay, well, it was just like, if you're going to assume this loan or whatever, I'm just going to make up a number, $650,000, right? But it would still be cheaper for this person to assume my loan, even though it's a $650,000 price tag that I'm putting on it, which is going to be more than what the loan is, right? So they would have to come up with that extra payment, right? Whether it's a 7% loan or whatever, but even added that onto the price tag of a lower interest rate assumed mortgage would still be lesser than the $600,000 home at 7%. Does all that make sense? So even though there's a little bit of higher interest paid on the increased price beyond that of what the mortgage has on it, because I don't have $650,000 on the house. It might only be like 600 or 550 or something of that nature. So they would have to come up with the $100,000 that is going to be a higher interest rate to it. However, with that added on to the lesser payment coming from the assumed mortgage, it would still be cheaper going that way than to buy a house at 7% interest. Does all that make sense? Like, that's where I assume could happen if the interest rates are to stay elevated in the mortgage markets going into the future. If there is a significant amount of people out there with a lower interest rate loan, and there's still significant amount of payment left in it, right? Because if you have already paid most of it off, it ain't going to make any difference. But there could be an opportunity inside of that, like, whether or not that happens, I don't know, because I rarely hear of anybody assuming a loan. Very rarely does that happen. I mean, I've read a few articles on it, but for the most part, I don't think that really takes place. Man, it is getting hot in this car. It's getting warm. It's going to get up to like 80 degrees today. All right. Do we consume more than we did 5 years ago? Though I am not entirely sure we do. When money supply expands, Wouldn't prices have an upward equilibrium simply because there's more money and money to capture? Okay. Thank you, tier 728. I'm going to call this my last question because it's too hot in the car to continue on. But I think this is a really good one. If the quantity of money from the money printer causes inflation, then quantitative easing 1, 2, 3, and 4 would have produced the inflationary scenario that the Federal Reserve was looking for. I mean, you think about it. Even Donald Trump at the end of his administration was saying there's no inflation. The Fed should be printing money. They should take interest rates into negative territory. And this was coming from Donald Trump himself, right? Not from the Democratic administration or something like that. This is Donald Trump's own words. So the money printer go burr doesn't necessarily cause inflation, right? Because most of that money printing that was taking place during quantitative easing 1, 2, 3, and 4 ended up as reserves on the big bank's balance sheet, right? And never really entered into circulation until it was lent into circulation. Now, this time around, we've had a much different situation take place in which that the money printing that had taken place not only ended up as reserves on the big bank's balance sheet, but then also came out in the form of stimulus checks. So now the government itself, when they took out the debt, when they borrowed that money by issuing out treasuries, and then eventually the Federal Reserve ended up buying those treasuries, the government itself handed that money over to the people and said, here, go just spend this stuff however you want, right? Like it was supposed to, make up for paychecks being lost or whatever. But they basically said, here, just go and do whatever you want with this money. And they did. Now, at the same time, there was a severing of the supply chain. So you can think about it between these two events that had taken place. If it was just the money, the stimulus, right? And they said, here's a bunch of stimulus, go out and spend it. It would have been a quick flash in the pan. It might have created some inflation for a short period of time, but it would have been quickly over, right? It was the severing of the supply chain that really caused the inflationary scenario to be as persistent as it was. And by severing the supply chain and handing out the stimulus at the exact same time, you created a supply-demand imbalance that was significant enough to be so dramatic that people would not see it any other way other than it was from the money printer. They forget that there was a severed supply chain happening at the same time. I mean, think about all the freighters parked off of the coast of LA, how the National Guard was going to be hired to move the containers away from the ports. This was like a significant issue taking place that really everybody kind of just forgot about, right? I mean, this whole severing of the supply chain that had happened. So now here we are in a situation in which that the Federal Reserve was actually looking for help from the supply side, right? That the supply would come back, bring in a equilibrium with the demand, right? And then we would find prices stabilizing. But it didn't occur quite in that fashion, and they don't understand why, right? But I called them out back when they said it, like they were lying. It was just part of this credible threat theory when they were putting it out there to the public that they were looking for help from the supply side. I said it wasn't going to work. I said, no, it's not. You're going to cause inflation to be persistent, longer than you had ever anticipated, because you're looking for help from the supply side. At the same time, you are telling the consumer to get out of here, which is why the supply side would come back online, is because of the consumer. Like if you hurt the consumer, what you are doing is you're telling the supply side to go get bent, right? Why would the supply come to a damaged consumer? They're not going to. Why would I invest my time, efforts, money, energy, anything I would do into production to try and bring supply back on if the consumer is going to be damaged from that? I simply wouldn't do it. So the supply was not going to come back in the fashion that the Federal Reserve was looking for, which is the reason why inflation is so persistent, which is exactly what they wanted, so that they could keep the inflation expectation elevated so that they can get their monetary policy back. Like all of this was done completely orchestrated and conducted in line exactly with what they were attempting to do. Like they did it. They did it exactly the way they wanted to, and it worked. Alrighty, guys, I am going to go because it is like 1,000,000 degrees in this car, but we'll come back out later on this afternoon or something after I do some chores. I'm going to help Ernie mow my lawn. All right, uneducated economist, you guys let me know.